sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over some updates for Bitcoin, and then I'm going to touch on some news towards the end of the video. But to go ahead and get things started here for this monthly chart for Bitcoin, what we have denoted here is, at least for our second and our third, basically just the typical bearish scenario, the bear market for Bitcoin with descending channels, eventually breaks topside in a bullish manner for our first one, so back here in 2011, 2012, then our current one up here 2021 to 2022, beginning of this year. We can see that it's more of at least a tightening descending channel, or you could just kind of call it a falling wedge or a falling triangle type pattern. Outside of that, we can see here that this first one lasted 12 bars, our second one here 25 bars, third one right here 18 bars, and then our fourth one 25 bars. And then outside of that, I do have a separate, a distinct one, which is the white dash trend line we see up here connecting the high of 2017 to the intermediary high of July 2019. And toward the breakout, this one was 32 bars. Each of these highlighted retracements, so these upper ones with the white background, are the main ones that I want to focus on. You can see each time, again, just to point it out, the first one was a drop of 93%, and these are each, again, these are the most notable, really the only bear markets we see. I mean, if we go back and take a look, right here would have been our first cycle, essentially, and then when you really started to actually see significant bear markets or bearish trends, again, so our first one was 93%, basically 94%, second one was 86%, third was 84%, and our current one, down our current low of around 15, approximately 15.5 thousand, was, if you round it up, 78%. So we can see here that there was a decrease of about 7% from the first to second. From the second to third, it was roughly 2%, and then from the third to the fourth, it was about 7%. So there really doesn't seem to be any clear pattern there, but the only concrete clear pattern is that each subsequent bear market, the downside is less severe, and then, as I have said many times on this channel, each subsequent bull market is less bullish. The percentage gains towards the upside are decreasing over time, as well as the severities of the bear markets once more. But the main thing that I think is very important to point out for this as well is, if we take a look down here, the MACD, you can see, which is denoted by the vertical yellow dotted trend lines, we can see going to our current one, March of 2023, we see we got our flip, the flipping of basically the pink, this being a MACD pair with Bollinger Bands pink, flipping into a blue bullish cross, lines up right when we basically got our first candle outside of this just in general descending channel or falling wedge pattern. Go back to May of 2019, we see the exact same thing back here. If we zoom all the way in here for the first two, we can see same thing happened in October 2015. And zooming all the way in right here to 2012, we can see the exact same thing also happened there as well. Outside of that, if we take a look here at the RSI and compare that to the price over time, we can see that each time we cross above our, basically for this monthly chart, it sits about 56, this kind of bullish threshold, as I'll call it, basically kind of being this little golden trend line that we cross over. You can see it essentially lines up just right before, or sometimes right along, the MACD flips. Back here in 2012, it happened before, and then after that, it is essentially lined up right as the MACD also flipped bullish after we had gotten into our most oversold territory down here towards the bottom. Eventually, we head towards our overbought territory to carry on out a positive velocity, just positive strength, obviously throughout the upcoming bull market. Once more, just to point it out, if we, for whatever reason, let's say that we're seeing a fake out this time around, I mean, obviously going back here on all of these, that never really happened. You could, I suppose, consider, if we go back to our most recent, staying within the current phase that we're in, starting from the high of 2017, you could, I suppose, call the March crash. So the intermediary high we set around July 2019, which then led into the March crash. I suppose you could call that a fake out. The wick for the March crash didn't precisely wick down to this upper resistance. Well, it was an upper resistance, but it did get rather close to it nonetheless. Another thing that I do want to point out is just where I'm specifically drawing these trend lines. I'm using the actual bodies of the candles rather than the wicks, given that this is a monthly chart. What I did here, because some of you might be like, well, this looks a little wonky. What I did was I connected our two top candles back here from December 2017 and December 2018. And then basically the slope, when you connect the bodies of those candles, very nicely lines up with the first candle that was completely outside of this resistance. And then it's essentially the same thing. I'll go over just this current one right here to show this. We can see here that basically right as we were leading into the $64,000 high, we started to then really start to form this descending channel, or just more accurately, like I said, some sort of a falling wedge. Here for this weekly chart, this goes to the thumbnail of this video, likely it's probably part of the title as well, but which I've seen this chart, or this picture rather, many times, and I'm sure a lot of you have as well, but I'm not really trying to put the main focus on the whole labeling, like the hope, the disbelief, the capitulation, etc., that this chart uses. But I was looking at it, and it kind of struck me like a light bulb moment that the harmonics of the price patterns used for this little Wall Street cheat sheet market cycle thing looks exactly like Bitcoin. Right here I have just clearly labeled each of the actual labels that are on the image itself, but essentially what we're seeing here, and I've pointed this out many times on this channel, is how if you start to begin to look at fundamentally the progression of price over time in form of a harmonic fashion, looking at price as an alternating M to W or W to M. But basically what we see here, to enlarge this image once more, what we see is we're basically seeing a massive M towards the upside. We come down, we make a smaller M in our bottom, and then we finally get some sort of a relief. Let me bring this to the front real quick. It's not going to stay above it. But anyways, what we're seeing here is the exact same price harmonics that I've been pointing out for months at this point on this channel. I mean, that's, again, we see a massive M leading into the bull market high, and then we come down and we make a W, with specifically the variation being having an M as the actual bottom portion of the W. And I mean, if we just trace over Bitcoin right here, we will see essentially the exact same thing until we finally break towards the upside. You can see from our bottom down here, we lead up into the double top of the M, we come down, we make this double bottom right here, which has a M as the actual double, or the bottom range. Again, basically it's quite literally just, we see an M leading into highs, we come down, eventually make a double bottom, we're going to eventually lead back into some sort of an M, and it's basically just that form of alternation over time. Again, this is a weekly chart instead of the monthly prior. But again, I just still have down here on the RSI, I can see pretty clearly denoted, staying within our current cycle, going back to the bottom of 2018, oversold territory, the March crash, bottomed out just above it to kind of denote that it wasn't necessarily the absolute bottom, the genuine actual bottom of the cycle, or the phase of the cycle that we're in. And then again, we went up to our oversold territory. We can see right here when we go to actually November of the, so we'll end up with the $69,000 high, being the double top of that M pattern. We can see we didn't get oversold. We had a bearish divergence. Continued to go into our highly oversold territory. Now we have come up, as I've been pointing out a lot recently, we're just sitting right in our neutral zone, which again, likely all of this, again, factoring in the monthly chart, this looks like we are having a very hopeful, which would line up with the actual phase, the stage we're in according to this little cheat sheet, a hopeful bullish buildup into the next bull market. So that the RSI sitting in a neutral zone, like I've said beforehand and I've said in the past on this channel, the RSI represents the velocity of price, strength of velocity. Right here we have a stock RSI, so again, we have the velocity sitting in neutral zone. We have our acceleration, which is what the stock RSI would be. You can think about it as a strength of acceleration, and the velocity would be a derivative of the price, thinking about it like a physical, scientific sense, and the acceleration would just be a further derivative. First derivative of velocity, a second derivative of the price chart. We can see how the acceleration of the stock RSI is up here in the upper half portion, which is a good thing to see when you pair that with the RSI being in the neutral zone, while the acceleration's in the upper half, the positive zone. That is basically saying that this is pointing towards a more likelihood of it breaking towards the upside, referring to the price, rather than seeing a significant retrace towards the downside. As I've been saying recently, I mean, we could definitely get a further move down to around like 23 to 22.5 thousand. Worst case scenario, I mean, as long as we just hold 20,000 in general, I think if we just hold 20,000, then everything should hopefully be okay. Although if we lose 20,000, I don't think that will be good at all. We come down here and we look at the MACD, momentum indicator, paired again with Bollinger Bands. We can see here, what we're seeing here is the MACD associated with the current, again, the phase we're on, going all the way back to the 2018 bottom of December. We can see here, as I've been pointing out, this type of formation here on this MACD going all the way back to the local high we set back in February of 2021 at around 60,000, just before we really went into 64,000. We've been having a very nice, really, I mean, it looks very symmetrical convergence of the momentum. You can see basically, and again, I'll just point it out, it's basically, if you just kind of think about it like a tornado, it's building up a bunch of pressure, kind of like a spring. Eventually, at some point, some sort of decision is going to be made. Either we are going to go towards the upside, or we will get rejected and see a massive breakdown in the price. But overall, I think right now we can see, if we look back at the 2018 low for the MACD and the 2020 low for the March crash, we can see that we, both times essentially, the March crash more so, we retraced to this, basically the this upper yellow dash line lines up with the apex point of the triangle on here. But this general range right here, and you can see we're coming down into, just now we're just right above it, this yellow ellipse pointing out the range we would likely go into, whether or not we continue to go a little bit lower, or we've already hit our local low and we are about to start a move back up towards the upside, and eventually with strength to break above the approximately $31,000 local high we've set so far. But I think everything really looks great. Personally, again, I'm not giving financial advice, but I feel like the charts are really leaning more towards the upside than to the downside. Although at this point, again, like I say, it's 50-50 at this point. I don't know what's going to happen. No one knows what's going to happen. But again, I think the charts really are kind of just leaning more towards the upside at the end of the day. Here for this 2-day chart, again, we see here on the green dotted lines, it's a curved linear falling wedge. Then we have with our red dotted line right here, a linear, what was resistance, connecting 69,000 to the $48,000 high that we got rejected on in March of last year. Again, we've broken out of both of these structures. Basically, it's a falling wedge. We are starting to form a bullish megaphone. We've already retested the linear, what was resistance, turned it into support. Now we're coming down, and we are basically retesting the golden pocket zone. We haven't hit it yet, and we may or may not hit it again. Like I said, that would be if we start to hit 23 to around 22.5 thousand. But nonetheless, we are retesting the actual megaphone pattern of this overall. And you can again see here that we're getting a, actually never mind, I was mistaken. But anyways, I mean, it's similar to the weekly chart. We are basically trading ever since going all the way back to around February of this year. We've been trading basically in the neutral zone with that brief moment back when we first broke out of this macro pattern, when we hit the oversold territory on this 2-day chart back in January. But for the most part, we are trading neutral. If we look at the stock RSI, we can see that we are in the lower hand, which either could mean we will continue to bleed down a little bit lower, and then eventually we will see this stock RSI have a move towards the upside. Let's say we do find this local low going all the way down to around 22.5. We then break above 30,000 approximately. We'll see the stock RSI likely do something like this. In general, just move towards the upper hand region to kind of correlate with seeing the RSI increase towards the upside and seeing the price obviously go towards the upside as well. The MACD is really kind of not really important for the most part on these 2-day charts. This MACD kind of gets a little fuzzy, but what I do want to point out is it's essentially just similar. I try to kind of avoid going over this MACD on the lower time frames because it just kind of looks like very sporadic. But essentially we're seeing the same thing. You can see we go all the way back to basically the beginning. So when we set our first, when we started ranging basically in this high back here from around January 2021 to around May of 2021, you can see that looking at the MACD, was more volatile, having higher swings towards the upside and the downside, but progressing throughout the double top into our actual bear market drop, and then leading into the bear market range starting around June of 2022, and most likely, at least in my opinion, ending around December of last year. You can see that it was slowly just becoming less volatile, lower swings towards the downside and to the upside, and it is converging around the 0 point. So it's essentially the exact same idea as I painted on another chart. We are seeing convergence of the momentum of the price pressure. Eventually it's going to break out one way or the other. Again, like I said, really everything does generally seem to be pointing mostly towards the upside here. I mean, just to reiterate, we go back to our double bottom we set first being in June of 2022, and then November of 2022, we saw a bullish divergence there. Then we've seen this really nice relief rally again to around 31,000. Right now, we want to see more in the short term, whether or not we continue to go lower or if we break up here soon. We first off need to see a break above 27,000. Once we break 27,000, realistically, the next target after that is, I mean, obviously around 28.5 thousand is going to be important as well, but me personally, I'm looking at more around 27,000, and then obviously just the most recent local high that we set, pretty much right on 31,000. Once we break that, I think that it will likely be a straight shot up to the high 30s, so around 36,000 up to the low, most likely the low 40s, but it could extend as high as around, I'll just say 45 to around 47,000. Again, this is what lines up with the proportion of the golden pocket range, with the retracement taken from our absolute low 15.5 thousand approximately all the way up to the local high again that we set at 31,000 as well. But here for this chart, this is a daily chart. It's essentially the same thing. What we see here is with these basically a bullish megaphone trading is again, just to go ahead and kind of point this out, I believe we saw the megaphone pattern right there. You can see that we had this form like that. I think, and again, just to reiterate, as I said in one of my past videos, I think we've just been seeing a very prolonged, you can call it a fake out if you want, or just some sort of a breakout, which is then, like I said, a very prolonged retest of the actual bullish megaphone pattern. Whether or not we go down to, like I said, a little bit lower, maybe as low as 22.5 thousand or not, I believe we're just seeing this retest that we need to see. I've seen a lot of people recently pointing out a daily support, which is what these lower white dash trend line range sets out. The one that I have on here, I'm gonna change the color of these just to kind of more clearly denote them, but these purple ones down here, the ones that I've seen people use, it more so kind of correlates to, did my internet go out? Why am I not drawing? Oh, I didn't even click on it. What a goofball. Anyways, so we draw this out. This is kind of more so the one that I've seen people using, just like scrolling on Twitter and whatnot. just really kind of using the slope with respect to the gradual buildup we saw from around December 30th of last year up to around the 10th of January of this year. And if you can see right here, that's where we wicked to on March 10th of this year. And that is what we have currently wicked to going back to, I think it was yesterday, June 15th. It's also, we have just touched down and we've tested the 200 estimating moving average once more. We're seeing a bounce. Either we will significantly validate this pink trend line, and like I said, we've set our local low, we've made this retest, and we will continue to go up, break above 30,000, or let's say we get rejected along the 800 EMA, which is what we're hitting right now, or we'll just generally get rejected within our 50 estimated moving average band, and around at highest around basically probably wicking around 27.5 thousand, which, like I said, 27.5 thousand to just 28,000 really right now is the first milestone to hit, break above, and then head towards 30,000. Then let's say we get rejected off that, and then we'd come down to kind of more solidly hit this ascending purple support range, which would line up with the apex of this megaphone pattern, as I have kind of more clearly denoted here with this blue rectangle. This range specifically sits at 22.8 thousand to 23.3 thousand, again being part of that pattern. That really is all for the actual analysis. So for the news, I don't know if any of you have seen it, but there's been a lot, Blackrock recently, and a lot of people are saying that it's not an ETF, that it's actually a trust rather than an ETF. And when you actually look at the filings and the documents, etc., for it, it uses the word trust. I don't. That's besides the point, really. I think that's negligent at this point, whether or not it is an ETF or a trust. The fact that Blackrock, and I'll get into Blackrock and I suppose just kind of elaborate more on what I personally think about them and what the sentiment around them is. But this thread right here I really wanted to go over, so I'm just going to read it out. But this is from Bitcoin, at Bitcoin_culture on Twitter. He says, did you know that while the SEC is busy suing Binance and Coinbase, BlackRock and the biggest banks in the US silently bought record amounts of Bitcoin? These banks buying Bitcoin in Q1 of this year include BlackRock, Bank of America, and Fidelity. It says, what do they know? We continue to scroll down here. We can see, looking at the largest holders of MicroStrategy, so going back to Michael Saylor and his stock for that company, we can see some big banks have been buying huge amounts of MicroStrategy stock in Q1 of this year. Yes, that is the same MicroStrategy as the largest institutional holder of Bitcoin, owning 140,000 Bitcoin worth over $3 billion. Here, just he included an image kind of going over the actual stats, highlighting BlackRock, B of A Securities Incorporated, also going back down, which B of A would be Bank of America, and then also Fidelity Management Research Corporation. But if we go to the next, it says, with the recent SEC lawsuits and Operation Choke Point 2.0, why are these banks buying stocks correlated to the Bitcoin price? Considering there's no ETF in the US, buying MicroStrategy is the easiest way for some US investors to get exposure to the price of Bitcoin. Right here, he just has a chart denoting the correlation between MicroStrategy to Bitcoin and then also NASDAQ. So MicroStrategy and the NASDAQ being temporally, which would mean whenever you see the major price pivots into bullish movements and bearish movements, basically it all essentially just lining up with Bitcoin at the end of the day. What he goes on to say is Bank of America has curiously increased their exposure to MicroStrategy by 47,800% in Q1 of this year. Bank of America is the second largest U.S. bank with a market cap of 233 billion and over 300 trillion of assets under management. He says, now let's look at what the world's largest asset manager with over 10 trillion assets under management is quietly doing. Again, this is essentially the same right here. We can see this massive right here, just to denote that again, that we're on $47.7 thousand. People, again, this is basically just saying all of these companies are investing in stocks, MicroStrategy, that are correlated with Bitcoin, also buying up BlackRock, buying up lots of Bitcoin. Goes on to say, Bank of America might have a 2.37% stake in MicroStrategy, but BlackRock has a stake in MicroStrategy that is 3 times larger than that. BlackRock, interestingly, holds a 6% stake in MicroStrategy worth over $156 million. Again, he's just pointing that out in the same image here. These second two images were the top 10 owners of, actually they're all three, just denoting the top 10 owners of MicroStrategy and them being invested in that. And then he goes on to say, doesn't BlackRock only invest in ESG-friendly companies? ESG means environmental, social, and governance. I will again touch on that later when I get more to touching on BlackRock and really what they are, if you're not already aware. And he says, why are they buying Bitcoin-related companies? Or are they buying Bitcoin in general a lot this year, more so obviously in Q1? And he says, I know, shocking. We'll dive deeper into the BlackRock rabbit hole shortly. However, they're not the only billion-dollar bank quietly accumulating MicroStrategy. He says an image right here. BlackRock plans no big changes to ESG stance despite the backlash. Another giant firm with over $4.5 trillion in assets under management has also increased its exposure to MicroStrategy by 28,000%. Fidelity has a 1% stake in MicroStrategy. Interestingly, it's not only billion-dollar banks in the U.S. buying MicroStrategy. There's a global appetite for Bitcoin exposure in 2023. Again, he's just using the same picture here, pointing out this time for Fidelity. He says we can also see that the sixth largest bank in Canada has purchased over $500,000 worth of MicroStrategy stock in 2023. The important question we should be exploring is, why are all these banks doing this in early 2023 when the Bitcoin price is down 60%? Then he says, are they following the lead of the $700 billion bank that recently predicted Bitcoin to hit 100,000 in 2024? And he says, we explored the math behind Standard Charter's 2024 Bitcoin call in this below thread. I'm not really going to dive into that thread, but nonetheless, really the whole sentiment here is we have BlackRock, Bank of America, Fidelity, very massive players investing in MicroStrategy correlated to Bitcoin, just Bitcoin in general. Why are all these elites, all these people buying all this Bitcoin and Bitcoin associated things? When Bitcoin has been down, the fact that a lot of people are still screaming that we're going to continue to enter an overall bear market. But right here I have a website going over what the ESG is. I'm just going to read it. Environmental, social, and governance criteria are standards for companies' operations that investors have begun using to either screen out potential investments that have deleterious effects. Deleterious just means harmful. To whatever they're investing in, etc., or to modify the criteria for making new investments in a manner harmonious with the ESG criteria. Environmental considerations include, for example, a company's energy use and pollution. Social criteria often examine how business carries out its relationships, including with clients and suppliers or among its employees. Governance concerns generally relate to how transparent a company is, the composition of its board and holding boards accountable for the promises that they make to their shareholders. ESG's popularity continues to grow alongside crypto assets. Last year, the more than $50 billion invested in sustainable mutual funds and ETFs set a new record. This growth comes as the Biden administration recently issued an executive order seeking to revise rules that limited investments focus on ESG factors in retirement accounts. Wealth managers across the country have acknowledged that a focus on ESG investments can offer long-term stable returns and enhance sustainability. While ESG and crypto assets have both been independently gaining popularity, investors have yet to draw significant links between ESG and crypto assets. This advisory discusses these links and will focus on the relationship between ESG investing considerations and the future of cryptocurrencies and crypto assets. I'll have this link in the description because this is like a PDF file and whatnot. It was published July 15th of 2021, so it is a few years old, although generally the information is still going to be good information. I mean, not really too much has really changed. I mean, the entire sentiment of what an ESG actually is essentially the exact same thing. And after reading that, some of you may be thinking like, oh, this kind of just sounds like a good criteria, you know, as it said, to kind of put some guidelines and some parameters around having positive, you know, in terms of your investments, effects when it comes to environmental things, social things, governance things. But at the end of the day, it depends who's over all of this. Which brings us back to BlackRock, etc., which again, I'm kind of building up to all of this whenever I finally go over the BlackRock thing. But another Twitter thread that I found talking about all this is at Crypto School X. He says something doesn't add up. The SEC suing everything, he says, but the SEC suing everyone and his mother. BlackRock buying massive amounts of crypto during the FUD period. Again, I want to divulge here for a second. In my last video, I talked about that cyclical chart that put Bitcoin's logarithmic progression in that spiral pattern, and each of the bottoms, the halvings, and the tops line up with specific bubbles, and it said that we were within the enduring stage. Also a FUD period, which I would say, because there's been a lot. I mean, going back to the FTX crash, now this whole SEC stuff and all this nonsense, these shenanigans. Yet again, as he's saying, BlackRock, other people, elites, a lot of money, also a lot of people that have a lot of assets under management are buying up a lot of crypto, buying up a lot of stocks correlated to Bitcoin, etc. Now BlackRock's announcing that they're filing a Bitcoin ETF or trust. Again, I don't think that's a negligent point. Using Coinbase, Hong Kong putting pressure on banks to take crypto clients. There's 10-year-old USDT FUD going on as well. Like he said, 10 years. I mean, this has been going on. USDT FUD has been going on for so long. It just keeps recurring and recurring. Same thing with the whole China banning crypto FUD that just keeps reoccurring over and over again. Then he goes on to say something massive is brewing anonymously, which I also agree with as well. And he says, I'm talking about the biggest bull market. One must be really foolish to not be accumulating massive here when the biggest asset managers in the world are as well. And he just goes on to say to be smart. Then he also says, I'm here to tell you that they can't fool us. He says he's been through 3 bull markets. He recognizes patterns. Also, the average retail investor is smarter now and then access to more tools than ever. For example, Twitter, etc. And he goes down to say, also, anyone pushing against this agenda, so basically what he said is probably a paid clown by the market makers. And he said those selling right now are just uneducated and are saving / protecting their funds. But in the hindsight, DCAing here, I mean, really going all the way back to around like the approximately $18,000 low that we set for Bitcoin. DCAing within that price to the $15,500 range would have been very good if you've been doing that so far. And he actually also just used the exact same pictures. I'm assuming he probably also saw the same Twitter thread I was just going over with the owner, like BlackRock, investing in a MicroStrategy, buying Bitcoin, etc. Which leads me into the conclusion of all this. So BlackRock, ESGs, all of that stuff, everything I've been talking about. So BlackRock is a part of the World Economic Forum. They're associated with that. If none of you are already aware of the World Economic Forum, I'm just going to simply put it without really going into much detail about it in this video. It's very bad news, a very big no-no. It's also just a very big no-no that BlackRock is putting up this filing for ETF/trust right now. They also have a 575 to 1 win or loss when it comes to filing for ETFs or trust or whatever. So really kind of the odds are sitting in their favor, although the whole ETF thing when it comes to Bitcoin has had very bad outcomes in general when it comes to anybody submitting a file for it. There's the Grayscale Bitcoin Trust, which means you just own your Bitcoin through Grayscale. You don't really even own it. Grayscale kind of owns it more so, which again, and just to go ahead and read this here before I go off into my tangent, BlackRock is a global leader in investment management, risk management, and advisory services for institutional and retail clients. BlackRock helps clients around the world meet their goals and overcome challenges with a range of products that includes separate accounts, mutual funds, iShares, exchange-traded funds, and other pooled investment vehicles. BlackRock also offers risk management, advisory, and enterprise investment system services to a broad base of institutional investors through BlackRock solutions. So they're also just an enterprise that has assets under their management. They have one of the highest, and like I said, going back to that Twitter thread, it's over 9. They have like over $9 trillion in assets under their management. And if the CEO is Larry Fink, which also is again general just bad news as well. I mean, the whole World Economic Forum is started by Klaus Schwab back in the 70s. He's the guy who wrote the COVID-19, the Great Reset book, where it literally says in the book, we're going to own nothing and we're going to be happy. It talks about basically protein, normal protein, that comes from like chicken, poultry, and like, you know, beef and like, you know, actual meat, which, you know, is good for the human body, being replaced with bug protein, which for the most part, bugs are not meant to consume and digest chitin, things like that. I mean, there's certain locusts that are good to eat, but for the most part, most bugs are not meant to be consumed by the human being. Anyways, that book is very bad news. The World Economic Forum is very bad news. I mean, when you have the owner, the guy who founded this, when someone writes a book called COVID-19, The Great Reset, and then him and his whole entourage of people and his they start predicting these things before they happen and saying, oh, this is coming next, and him going on about how after there's a literal video of him talking about how there's going to be upcoming cybersecurity attacks, power outages, basically the electrical grid going down, and he says you need to pay insufficient attention to it, which is obviously, when somebody says that in regards to power outages, electrical grid going down, cybersecurity attacks, that should bring up a massive red flag. And he says, Klaus Schwab is the one saying this, he says that this is going to be, these upcoming cybersecurity attacks, electrical grid going down, is going to be basically COVID-19, and that pandemic compared to that is going to be like comparing a speck of dust to a massive boulder or something. Like the upcoming cybersecurity attacks are going to be so much worse than what happened during the pandemic. And I mean, you got to think about it. Like, I mean, if the electrical grid goes down to the degree that they've been talking about for, I mean, about a year, probably over a year at this point, they've seemed to have been right about a lot of things. I mean, think about in the modern society we live, the internet goes down, you know, power in general is just not working. It's also, it's going to affect the cryptocurrency market, you know, blockchain solutions, etc. Depending upon how long it's out, people are going to go crazy. I mean, people are literally addicted to their phones in general, for the most part. I mean, it's going to affect the food supply as well. I mean, just in general, the supply chain shortages that the world's been having to face recently, which again, this factors into why he's saying that it's going to be so much worse than the rumblings that we felt during the COVID-19 pandemic, which, you know, seems to be dying down. But at the end of the day, who really knows what's going to happen in the future with regards to some sort of virus or pandemic or whatever. But anyways, just to kind of sum up what I just got done going over before I move into the next part, is that, so we have the SEC suing Binance, Coinbase, and I think Kraken was associated with it as well. All the while Blackrock, major elites with a lot of money, are using Coinbase to file for an ETF or trust, and they're buying record, or at least a lot of crypto in Q1 of this year. They're investing in stocks heavily correlated to the movement of Bitcoin. So we have all this FUD, all this fear and this uncertainty happening to scare out a lot of the retail, to freak out a lot of the small fish in the sea, while all these big people, these whales, as a lot of people call them, are buying up a lot of this. I mean, if anything, that should just tell you that, like that one Twitter thread said, that there's something big coming up. And again, just to factor that into the technical analysis I went over, I mean, for the most part, like I said, technically, when it comes to the technical analysis, I mean, really, at the end of the day, I mean, for all I know, 5 minutes after I get done recording this video, or an hour after I've uploaded, Bitcoin could crash a whole whopping 30 to 50%. But at the end of the day, the technical analysis is pointing and leaning towards the fact that there is a massive bull market coming up, and we've been seeing a bullish build-up, and then factoring that in with the news, I think it's just creating a perfect storm where the news is affirming a bull market and the technical analysis is affirming the bull market. Those are very major indicators. But anyways, so here we have the gold chart on the monthly. So the first two ETFs that came out, let's say that BlackRock wins this ETF or this trust, whatever it is. Like I said, I don't think it matters at this point. I think that's a negligent point. I mean, the filing specifically says that it's a trust. But again, anyways, just to move on from that. the first ETF that came out for gold, goes all the way back to, relates back to like Australia or something, but typically when you like specifically look up the first ETF, it'll talk about this second one right here, Street Tracks Gold Shares ETF, which was November 2004. This first one that was associated with ETF securities and like in Australia and whatnot, gold bullion securities, came out March 2003. So basically the first two ETFs that came out for gold basically happened within a year from each other, and you can clearly see within this range what happened to Bitcoin after its first ETFs came out. Or, my bad, I keep saying Bitcoin. Gold had massive increases after its first ETFs came out. So likely, let's say BlackRock gets this ETF/trust again, it's probably going to see massive increases in price towards the upside, again factoring in everything I said. But here's the thing, going back, like thinking about Grayscale Bitcoin Trust, like if you buy Bitcoin through them, they basically are holding your Bitcoin for you, and then factoring in BlackRock and the big no-no surrounding them and the World Economic Forum, etc., you really don't want to be buying your Bitcoin through a BlackRock trust or ETF. Or it goes back to the whole like not your keys, not your Bitcoin or not your crypto in general. It factors into why you should, in the best case scenario, have an offline cold storage hardware wallet. Which, just to bring that up real quick, if none of you noticed, Ledger recently, which is probably the most popular offline cold storage wallet, they recently, which is the one that I have, but they recently came out with an update that stores your private keys. So basically, if you don't know what I'm talking about for whatever reason, basically the password that gives access to your funds on the wallet itself, and then they're storing that password, basically your seed phrase and whatnot, in a cloud databank, which is, again, just to simply put it, it's a massive no-no. You don't want basically the password that gives access to your wallet stored in a cloud database, a cloud databank. I mean, it's literally antithetical to the point of what a offline cold storage hardware wallet is. It's antithetical to the main point of Bitcoin, decentralization, blockchain solutions, trying to bring financial, economic freedom, etc. It's just, and early on, I really saw the fact that Ledger, to me, I just started to feel that they were basically becoming and going to become the Apple of hardware wallets, which, I mean, if you don't know, I mean, Apple is also not a good company either, with the whole spying on you and whatnot. But not to get too far off in that tangent, it's just, it sucks really to see the fact that everything in this space really generally does seem to be slowly but surely just trending towards the high up elites whom have malicious intents being the ones that are going to end up with the control over all of this, and they're going to ruin something that could be very good for the common man, for the bringing people out of poverty, for the middle to upper middle class. It's just, I mean, it's really just unfortunate to see that it is really generally going that way. But last thing on Twitter that I want to touch on, here, tweeted out by CryptoCon. Basically what we see here is an MVRZ score. And up here is a little equation for it if you don't know what I'm talking about. But basically, the same thing is just happening here. It's just a technical analysis pattern. If we take a look here at the 2x, the MVRZ score, we can see going back to 2012, once the this hit this line, we saw the mid top. We go to 2016, hit it, we saw mid top, and 2019 we saw the mid top, which lines up with that intermediary high that I was talking about in June of 2019 on that chart earlier. So whether or not we end up getting really referring to the 2012 and the 2016, these little bubbles right here as mid tops, is me personally kind of negligent, because they weren't. I mean, if you compare it to 2019, there was a drastic decrease in price afterwards, this being labeled as a mid top. But if you look at 2012 and 2016, there really wasn't. So, I mean, again, this is also just pointing out the fact that we are likely, I mean, we've already bottomed out. We are seeing a bullish build-up. Maybe we'll see a mid-top, see a significant retrace, and then the most major parabolic point of the bull market will then ensue. Again, who really knows? But at the end of the day, it's all just further confirming. I go back to this monthly chart, what we see on here. Again, I don't personally think we'll see a mid-top like he kind of had painted out on that chart there on that tweet. Like I said, just to kind of wrap this video up, I think we are seeing a breakout here. We're basically seeing a retest of this descending channel / falling wedge. At least the falling wedge is what we currently have. We're seeing a breakout of a bear trend that has lasted over a year. We're seeing a retest of it, basically some sideways consolidation right before the major storm hits. So we see parabolic movement. I don't think we're going to see a major mid-top. I think, at least if I'm correct, and my projections are correct, according to my phase cycle theory, etc., I believe whenever we find and solidify our local low in the next coming about, I would say, month to 2 months, we will then, in my opinion, see a pretty straight shot towards approximately 225,000, give or take like $10,000, happening most likely in the first quarter of next year, which again factors into what that $700 billion bank on that Twitter thread, they predicted Bitcoin hitting 100,000 by next year. I mean, if we look at my projection, by the time we get into next year, Bitcoin will basically already be far over $100,000. I mean, they obviously would be correct there, but that's really all that I wanted to touch on in this video. So hopefully you guys enjoyed the content. Again, none of this is financial advice. Hopefully you took away something from this in an educational way to apply to your trading scheme. But everything being said and everything gone over, I hope you all have a blessed day.
Ooh, I regret now, won't I see you forever, start to